viewers. Good morning, good afternoon, good evening, as per wherever you are and from the place you're viewing. So, as per today's part, we are going to have a brief look at what is meant by golden crossover, and going to analyze, back analyze, and going to describe you what is meant by golden crossover. Let me just delete out what I've drawn. Okay, so now the chart is clean. Now the chart is clean, and we are going to have a look at what is meant by golden crossover. So it's a setup. Basically, it's a setup of having two moving averages, and there are two moving averages for sure. Moving averages should have a value in it. The values of two moving averages of 200 and 50 moving average. So let me just include it. So I'm here with a daily chart of Reliance. I'm here with a daily chart of Reliance 1 day time frame. Here is the 1 day time frame of daily chart of Reliance. So this could be applicable to any. This could be applicable to any chart or like any stock for sure. So let's just get started. Here we are going to do indicators. How to include the first step should be for an absolute beginner for sure. This is going to be very much helpful for an absolute beginner to know the trend in the market, in which direction the market is being moving, or what's currently happening in the market. That could be easily found out by the setup of 200 moving average and 50 moving averages, and based upon the crossing of how 200 moving average and 50 moving average crosses each other, entry or a short entry or profitable entry can easily be made. Okay, so let's start this video. This For sure this video is going to be a bit lengthy for sure, because we are going to cover each and every aspect of what the golden crossover means and how does it takes place. So moving up to the first step should be including moving averages. Just go to indicators, and on the search bar type MA. Here is a various list of moving averages. Okay, MACD strategy. We have to just click on the option which appears on the first, which is moving averages. Okay, first click, we can see here is a moving averages being included. Second click to include another one. Okay, just cross the page. Going to these two moving averages, right now we can't see them because they are in respective colors. They are in the respective colors of blue and green. So we're going to edit the fields, as I priorly mentioned that the moving averages we need while having a golden crossover, knowing this strategy, a 200 moving average and 50 moving average. So let's change the value of the moving averages. Here, going to the settings, we are going to the settings, going to style and input, priorly going to the style, editing the length. Here the by default length of a moving average is 9. Okay, so let's take our first moving average is 200 moving average. Going into length, setting length as 200, getting into style, setting style as yellow. Okay, we have changed the color. This yellow lines, let me make it a bit thick. Okay, so by going right over here, we can make it thick. This is yellow line. Okay, I hope this line is visible to all. Okay, fine. This one is visible. Okay, so this is the yellow line. This is 200 moving average. As we can see, prior it is 9. Now it's changed to 200, and values which are being noted right over here. Right over here. Okay, here is the cursor. Just view the cursor. Right over here are written in yellow, which indicates the 200 moving average is yellow in color. Let me click on the line. It will highlight the box. It means the line which is yellow in color is 200. So if I click the box, it will highlight 200 moving average line, which is yellow. Same we are going to do with the second moving average. Going to the settings, going to inputs, editing 9. So second moving average we need is 50 moving average. Okay, then going to style, we can set any color as per our need. So just for the visuals, yellow and white color I think are easily visible on the black background, and complementing with the green and red candles. So here going with white color, we are selecting the white color. Now the line which is white is 50 moving average. Let me make it a bit thick so that it can be easily visible to all. Okay, going to white, and it's like from here we can change the thickness. Okay, by the way, just an additional knowledge. Okay, so here we can see we have applied two moving averages. The first one is 200 moving average, which is colored in white, and the second one is 50 moving average, which is colored in yellow. Here is the chart. Here is a chart of Reliance Industries on 1 day time frame, and we are going to have a look at one of the very important strategy, or like one of the very important basic concept in stock market, which is golden crossover. So let's go. Let's go. Let me select a pen so that we can draw a bit, and like drawing would be a bit helpful in this case. Okay, so here are the two lines. Okay, so let me just draw. Let me priorly draw. Okay, here are the two lines. Let me color them as per the colors which are given to the moving average, so that it could be a bit easy. The first one, which is yellow, is 200. Okay, this one is 200. This one is white, 44. Okay, and then going to this one, changing the color. I must be assuming that you all should be familiar with how to change the colors, like all those basic things which could be done on trading view, and making it white. Okay, making it white. Okay, the setup is ready. So there are two kind of if there are two moving averages, there are only two possibilities. Either this 200. Okay, so let me add a text here. This is selecting the text, adding a text. Let me add it as 200 moving average, changing the color to white, because we have set. Oh, sorry. We are here with 200 moving averages. This one, 200 moving averages. This one, yellow one is 200 moving average, and white one is 50 moving average. Okay, so let me change the color to yellow, and here we are going to write 50 moving average. MM is moving average, and we are going to set it as white. Same here. Same here we are going to do. Like, let me add two the text box again. The first text box and the second text box. Here we are going to write as 200 moving average. So this is going to have, as I prior said, this is going to be a bit lengthy video for sure. But for sure, this is going to be very helpful. Very helpful to know the basic trend of market, in which direction the market is going, and should we enter the market or not. Okay, so editing it as 50 moving average. Okay, white one. Okay, so let me give a brief about the system what we have created right over here. Let me give it a brief. Let me give you a brief. Okay, so as we can see, this is a chart, 1 day chart for sure. The white one, if I'm going to click on white one, this is 50 moving average. The white one is 50 moving average. If I'm going to click on the yellow one, this is 200 moving average. So here I've created two scenarios of what 50 moving average and 200 moving average can respond. The first scenario, this is the first one, this is the second one. Okay, fine. The first one is a scenario in which 200 moving average, this is 200 moving average, is crossing downward. We can say 200 is coming from upward direction to downward direction, and 50 moving average is coming from downward direction to upward direction. A set in which 200 moving average is downward to the set of 50 moving averages always indicates a bullish market, a market in which the price of a stock is going to rise. Okay, should I repeat here? Let me repeat for you. If 200 moving averages cross 50 moving averages in a downward pattern, we can here observe that. Okay, let me change the color. Because it's going to be a bit confusing if I'm keeping the white color as it is. Okay, here is the arrow. Okay, fine. So if I'm saying, let me tell it, we can use a arrow indicator here. We can use arrow indicator. Here is an arrow. Okay, so if 200 moving average, if 200 moving average crosses 50 moving average in a downward direction, then the market is going to be bullish, which means green candles are going to occur. So let me add a text over here. Bullish condition. Okay, let me change the color, as we have assigned white to 50 moving average. Let me assign it as blue or blue. This one, blue is fine, because it's going to be easily visible to each and everyone. Okay, fine. The text box is added. Oh no, delete the previous one and let us add bullish condition. This is a bullish condition. Let us revise together. A condition or a setup in which 200 moving averages crosses 50 moving average downward or 50 moving average crosses 200 moving average upward is a bullish condition. Okay, same here goes with the condition 2. Let me delete this arrow. Here goes with the condition 2 in which 200 moving average crosses upward the 50 moving average, or the 50 moving average crosses downward the 200 moving average. This is a bearish condition. This is a bearish condition. Okay, this is a bearish condition. Okay, this is a bearish condition, and those are not knowing what is a bullish condition or bearish condition. Bullish, rather than bullish condition, we can write bullish move or strong rise in the price of stock. And the same condition can be also indices. The same indices. Okay. The same setup can be also applied to indices as well. This is the okay. So fine. Bearish condition on this. Bearish move. We are going to write it as bearish move or a strong sell can occur. Okay. Let us revise again. A setup in which 200 moving averages crosses 50 moving average down is a setup in which bullish move or a strong rise in the price of a stock, index occurs. Here is the condition, which is condition number 1. We have named a condition 1. Let me make it blue. Let me color it blue because it could be easily visible. Okay, here is one condition. Here is condition number 2. Fine. So this is a bullish move and this is a bearish move. Let us revise bearish move. A condition or a setup in which 50 moving averages crosses 200 moving average down is a bearish move or a strong sell can occur. So let's verify the same. You can, for reference, you can take the screenshot. Just these two things are very important. These two things are very important. For reference, you can take the screenshot. Okay. So let us backtest our strategy. So starting from the very beginning, let's take an example right over here. Let's take an example right over here, because this is where we can see these things. Okay, so taking up example from here, a condition. So starting from the very recent price, this is a very recent price. So in this, at this point, let me mark up an arrow for you so that this can easily visible. Okay, here is the arrow at this point. Okay, at this point we can say yellow color, which is 200 moving average, is crossing 50 moving average in a downward direction. 50 moving average is crossing this in an upward direction. So bullish move or a strong rise in the price of stock, indices. As we can see, as we can easily see, we can easily observe, we can easily say that there is a rise. There is a rise in the price of a stock. We can say after this, this going up, then down, then there is a rise. Am I clear? Am I clear to each and every gentlemen? Am I clear? Because that's gonna be a bit easy kind of setup, but that's the basics. That there is very basic. Okay, so if 50 moving average getting to the next point of crossing, I'm going to mark it. Let me mark with an inverted arrow because it's downward. But okay, this one is thing I find. Okay, set aside. Okay, so moving up here. Let me revise it once again. If 50 moving averages crosses 200 moving average in a downward direction, then it's a buy. Then it's a sell. The stock price should reduce out. We can see here it happening. You can easily see that here it's happening. Okay. So point 1, it's applied. Point 2, it's applied. Okay. Let me clear. So no. the chart would be a bit clean, so that would be a bit easy for us. Here we can see a major move. Here we can see a major move. So where is the point of cross section? Can you just tell me? Just wait for 5 seconds so that you can find out where is the point of cross section. Okay. Yeah. So yes, you are right. Here it is. Then another cross section. Here it is. Then another cross section. So I'm going to change the arrow because if I'm marking it somewhere else and it's in the part of candle, that would be a bit, I think, like keeping the chart all clean is always preferred. Okay, keeping the chart clean is always preferred. So as you can see, there are not any major moves from this point of view. Here is a cutting. Here is a crossover. Moving this thing. Okay, fine. Here is the point. Okay, let's verify. We have marked 4 point and we will turn as the same. 50 moving average is white, yellow, and revising out. 50 moving average is white, yellow moving average is 200. If 50 moving averages crosses 200 moving average in upward direction, this is bullish move or a strong rise in the price of a stock. Okay, so here we can see. Let me mark for you. Here we can see. Here it occurs. Here it occurs the condition one. Here it satisfies the condition one. Boom. Here goes the stock price. Can you see the exponential rise? Can you see the exponential rise? Okay. Here is the stock. Here is the price of stock occurs increases. Okay, fine. Moving. So this one is verified. Point is being verified. Moving up to this point. Moving up to this point. Let me select marker. Okay. Here is the point where crossover occurs. So condition one or two has to be satisfied. Yeah. The condition one or two has to be satisfied. Then what's the condition? 200 moving average is yellow and 50 moving average is white. 50 moving average is cutting 200 moving average in a downward direction, which in this condition. Condition number 2 is being satisfied at this point. So we can see a clear downtrend in a market. Clear downtrend or clear sell in the market. Okay, a clear sell can be seen. Clear sell. Moving to the next point. Moving to the next one. This is the point. Let me just move this arrow a bit down so that it's not in the range of our mark. Let's reduce the size. Let's delete it. Let's get to cursor. Let's reduce the size of the arrow. Let's reduce the size of the arrow. This is the arrow. I think it must be visible to all because this is the crossover. Okay, let me mark the crossover with a marker. Okay, this is the crossover. This is the crossover. This is the crossover point. This is the crossover point. Let us go to our chart, like basic drawings, not chart even. This is a chart. Let's summarize. Have a look at these two things, these two crossovers for a while, and we are going to going back. Here's the crossover. What's the case? This is condition number 1 in which 50 moving average is crossing up to 200 moving average. Can we see a great rise? Okay, this one is yellow color. Let me change to pencil. Here's pencil. Selecting the marker. This is the condition 1 is being satisfied. What is condition 1? In which 50 moving average is crossing 200 moving average in upward direction, in upward trend. So here we can see a clean rise in the price of stock. Can we see a clean rise in the price of stock? Yeah, easily. Here is again the condition is being satisfied. So same goes on with each and everything. Each and every time this crossover occurs, and these crossovers are very important. These crossovers are very important as per a beginner's point of view, because just getting in the market and yeah, analyzing the trend is very important in what kind of trend the market currently is, because just looking at the chart without even these setups can be a bit confusing, that in what direction the market is going and should I enter the market, should I exit the market. So these two averages, these two moving averages, the first one is 200 moving average, which is being denoted by yellow color, and the second one is 50 moving average, is denoted by white color, are very useful in market to know the trend, in which direction the market is moving, and is there any kind of trend change or not. So This is a setup, very basic setup, and there are a large number of traders who take trade based on these setups. So we are going to have a look and further look how to enter and exit the market on a buy side, on a short side also. But short sides are basically on intraday, so I didn't think so. This is a bit helpful for swings and positional kind of thing, long term investment, we can say, or positional swings. So further in the video, like in the next part, we are going to have a look at how to enter and how to exit based on these setups. And yeah, so do let me know. Do let me know if this is useful for you. If do let me know if this is useful for you, and if that's so, please do consider like, share, and subscribe. And yeah, thank you so much.